Welcome back to the Dividend Diplomats YouTube channel. You got your favorite broskies here, the Dividend Diplomats, Bert, the Hurt, and Lanny, guys. Oh, the dip. We're filming this on April 10th.
The dip,
Man,
baby, dip.
dip, baby, dip. When you dip, I dip, we dip, guys. The market is still crashing, or it's rising. It's crashing. It's dipping. It's buying the dip. You bought the dip, dip, dip. But we got three higher quality stocks we wanted to talk about that aren't really talked about much here on the dividend investing. We'll call it LimeWire here, guys. Really, people have been focused on either VOO, VTI, SEHD, VYM, VIG, and ETFs. Others have been talking about, okay, continue to buy, Google, Nvidia, AMD, Microsoft, Apple, Tesla stock. But we're going to feature three other stocks not heavily talked about.
Yeah, we're going to be talking about Bitcoin, Ethereum, and Doge. We're kidding, everybody. Smash that subscribe button. Give this video a thumbs up. Let's freaking go. Right now, there are some fantastic opportunities in this tariff-ridden world where you see these wild swings in the market. The stock market goes up, stock market goes down, stock market goes up, stock market goes down. That's why we run them through our metrics. We know what stocks are going to meet our investing criteria, and we're ready to buy. We're ready to move some assets from the sidelines into those high quality dividend stocks.
So I own all three of these stocks, guys. Again, we're filming this the night of April 10th. Market finished down a couple percent today.
That's normal. That's a normal day for the last 5 days.
Oh, that's it today. But the first stock is actually another asset management based firm, one that I talked on the channel a few years ago, and they had a lovely ride up. They were flying high. They've been returning incredibly over the last 5 years. In fact, they still have. They're still up 147% in 5 years, guys. So if you bought based on those videos, you're welcome, because we're talking about Jackson Financial, ticker symbol JXN. They've been trading at $71.15. But Bert, actually, I got to pull up here on the phone the highest point that Jackson was actually trading at was around $115 per share. So they are down $44 from that 52-week high back in quarter four of last year, guys.
Just a little bit, right?
Yeah, just a little drop in the bucket now for them. Now, again, when we run them through the DD screen, are focused on the PE payout, yield, and growth. You'll see why they're really on my radar again, despite actually, if I bought them now, I'd be averaging up my share price on them a little bit. But they're trading at 71.15, and guys, they're at a PE of, again, Seeking Out is projecting over $19 in earnings per share. So their PE is actually less than 4 times earnings right now.
Yeah,
but you can cut that in half. Let's say earnings in half, and you're still at below 8.
Yeah, it's something we talked about in the last video too. When are all these aggregator sites going to catch up to what's happening with earnings? Maybe they have already. And if they have, and Jackson Financial showing $19.50 earnings per share, fantastic though. Probably not, but you're right. Even if it's cut in half, PE is still below. Let's move over to that payout ratio though, where we talked about how important that was on Thursday. Talk about that safety of the dividend. And this is where you want a low payout ratio. Times like this, you want the payout ratio to be lower so a company can continue paying and even growing that dividend. Jackson Financial pays a $3.20 dividend. When it's a 16% payout ratio. So you cut earnings in half, only a 32% payout ratio. That's fantastic.
Exactly, guys. Now, they've only been paying the dividend for 4 years. So we're looking at the 4-year / what a 5-year growth rate would look like. It's at 15%, guys. I mean, they increased their dividend last from 70 cents to 80 cents. That was just, this year. So they're just throwing out bangers on dividend growth, guys, because they don't have any fear in paying back their shareholders. Now, with that share,
you everybody.
What? Even with all of that, now with the stock price dropping over $40 a share and almost 20% this year, the yield finally is back over 3%. Not only is it back over 3, but it's back over 4, and it's actually right now at 4.5%. So even if dividend growth at 15% gets cut down, let's call it 5%, 6%, you're still at around that double-digit dividend compounding factor at a Jackson Financial price that is literally almost cut in half from where they were.
It's absurd. I have nothing more to say. It's absurd. So let's see how they're performing. Year to date, they're down 18%, up 8.5% over the last 52 weeks. And over the last 5 years, they're up 147%. So even though they're down $40 per share from that 52-week high, they are still murdering it over the last 5 years. And that is exactly why you, sir, would be increasing that cost basis if you added to your Jackson Financial.
Yeah. Yeah. So, and where would I, I don't think these are bad prices. Now, I'm not going all in on any stock or in any ETF actually right now because I'm not trying to time the top, I'm not trying to time the bottom. I'm just trying to grab it when I have it.
Yeah. That's the way to do it because we can't time the market. We absolutely cannot time the market, and you can't either, no matter what you tell us in that comment section below.
So, dividend stock number 2, guys. This is another legendary stock here, guys. Caterpillar, ticker symbol CAT. We're heading into the industrial space. Bert, I've owned this stock for probably close to 10 years now, possibly. They've been a great company. They're a well-run business, guys. But I think you and I were talking, Bert. Was that 52-week high at like $413 a share?
Yeah, according to Google Finance, it's actually looking at $418.50, which you're like, okay, that's a share price. That's fantastic. But their current price, Lanny, $289.16. That's a huge drop.
Yeah, we're talking $130 in price difference between Caterpillar at 418 to 289, guys.
And a drop.
Seeking Alpha, this isn't the Jackson Financial EPS. This is CAT's EPS, which is very similar. Seeking Alpha is projecting, again, $20 in earnings per share.
Oh, baby.
15 PE when historically they're usually into the upper teens, maybe in the low to mid 20s. Again, it's just because they're constantly growing earnings, constantly performing very well.
It's fantastic. That dividend's $5.64. So that's a 28.64% payout ratio. So if you cut that dividend and you cut the earnings in half, like we talked about with Jackson Financial, Caterpillar still passes our 60% dividend payout threshold.
I mean, yeah, they do. They've been growing dividends. They're an aristocrat, 31 years. Love the number 31. 5-year growth rate on average is 7.
Is that your favorite number?
It is one of my favorite numbers, guys.
You heard it here first, everybody.
That's right. Ricky Davis, if you know, you know. 7.38% dividend growth rate, guys. Well above the rate of inflation. Yeah, Rick, keep laughing over there. Now, how does that pair with dividend yield, guys?
Really fast. It's a completely different tangent. Was he the one? Or was it him or was it Darius Miles that said LeBron is going to be one of our teammates?
D Miles.
Okay, that was D Miles. Ricky Davis was the guy that shot in his own basket for the double-double, right?
Yeah, or it might have been Ricky or Boozer, one of the three.
Okay, sorry. Old Cavs stuff here, everybody. So, Lanny, please proceed to the yield for Cavs.
So that pairs up pretty nicely right now with a 1.95% yield. Mad because you could have got this in the lower 270s just a couple of days ago. I'd look for that 2% yield for Caterpillar if you're interested to get in, just so you can get at least that baseline yield. Again, it's only 5 basis points, but still to get a stock price $15 lower, it'll take a couple percent drop, but the way things are going, you might be able to get there.
Yeah, you might have already gotten there by the time this video gets released, everybody. But that's how volatile this market is. Number 3, let's change gears here. We're not talking annuities anymore. We're not talking heavy machinery. We're talking community banking?
Yes, back in the community banking space, guys. You might recall I talked about 2 other community bank stocks that I was possibly considering selling before the bloodbath happened.
Yeah, before the bloodbath happened.
Because now
perfect timing.
Yeah, because those yields were like at one point, I think they're like both 5.5%. They're probably yielding closer to 10% now. Who the hell knows? But there's a quality
Who knows if
community.
dividends are even going to happen anymore after
Yeah.
10?
So we are just diplomats.
Yeah. We just ripped the dividend off the look.
Just investing into stuff and hoping to God that they resume dividends in some future part.
Investing
Um,
into things.
yeah. So, or guys, ORRF, a community bank with 513 million in market cap. It's a smaller cap stock here, guys. But again, they've been a very good
Yeah.
performing bank. As Bert and I we were talking, they're growing very steadily. They're merging and acquiring banks. They're on that
Bacon
side.
and bacon.
They're shaking and baking, growing, and they're growing that dividend too, as we'll come to find out. But they're also up 78% for a bank in the last 5 years, which is rock solid. But yeah, they're trading now at $26.31. They are down 27% now this year at the time of this video. So they're finally showing a lot more value than they had previously. Again,
Yeah.
another small PE ratio at below 7 right now.
Yeah, their payout ratio, their annual dividends $1.04. That gives you a payout ratio of 26%. So if consumers get stretched, bank earnings drop, Lanny, guess what? Cut them in half. That payout ratio is still below 60% at 52. Beautiful.
You probably see the theme here, right, guys? As Bert's indicating, low payout ratio with Jackson. Cut the earnings in half and you're still fine. Low payout ratio with Caterpillar. Cut the earnings in half. You're still fine. Low payout ratio with Orstown Financial. Cut the earnings. You're still fine.
Yeah. I mean, it's what you got to think about. It's what you got to consider when times are turbulent.
If you haven't checked Saturday's video, because it's the opposite. High payout rate, which if any change in the earnings lower, you are sweating, if not already.
That's absolutely right. Orstown's 5-year growth rate's 10.59%. And as you said, they've been increasing now for a decade, ever since they got out of some regulatory issues a decade ago. They have increased that dividend. So that's exactly what you want to see.
And guys, the last increase was 10%. I think they went from
Ooh,
23 to 26.
10, 10, 10. I love it.
Now the yield, you're
10?
going to be, that's it. No, yeah, it's only 3.95%. So it's not like the scream, highest yield here. It's not the UPS stock yielding almost 7%, the Stanley Black and Dumper yielding almost 6%. Your Dow in chemical stock that now all of a sudden is yielding 10%, and your Lyondell Basel that's yielding 9.8%.
Great companies. Yeah, but you're right. Like, you'll trade off higher yield for right now for safety. I think that's a very fair trade that a lot of people are willing to take at this point.
So you can get a nice almost 4% yielding stock with Orstown Financial. Again, down 27% this year in 25, up 78%. The valuation on a bank, you want to look at the price to book value. Again, they're trading at 26.31. The book value is 26.65. So they're actually finally trading below that book value, which is another sign of possibly being undervalued right now.
Yeah, that's a huge line there for Orstown. So that's fantastic.
Yeah.
Everyone, the three companies we're talking about today, Jackson Financial, Caterpillar, and Orstown Financial. Remember, all focus on that dividend safety with those low payout ratios.
Yeah, and again, I'm going to look back at the portfolio, see where my costs are with these. I'm more interested right now in Orstown Financial simply because, they've got undervalue on both sides. And if things change, and also there's always that thing of an acquisition and merger target, which I guess Jackson kind of can carry as well.
Yeah, I think that's also something to keep in mind for the banking because outside of everything that's going on with tariffs, we are entering in a more M&A bank friendly environment here. So keep that in mind. Deregulation, they're going to be encouraging more mergers and acquisitions to consolidate the space. So that's why we keep focusing here on community banks on this channel.
Yeah, and I'm looking back at the prices I was buying for Jackson Financial, and yeah, I'll be definitely averaging up because I forgot that I was buying Jackson
40s, right?
in the 20s and 30s.
Yeah, that's definitely be averaging up.
I'm like, God dang it, mother. Yeah, I for some reason I thought I was buying them in the 60s and 70s, but nope.
No, I thought 40s. I thought it was in the 40s, but
And then
hey,
Orstown I was buying in the teens.
good problem to have, everybody. Man, you're really suffering over there, Lanny. I feel for you.
Yeah, I've doubled my share price. No.
Yeah. Yeah. I'm buying more to average up. God, the agony, the pain.
Let us know, guys. What stocks have you been buying on the dip? Are you enjoying the market crash? Are you running out or are you running in and taking advantage of opportunities, guys? Let us know in those comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. Manny, what do we need to tell all those diplomaniacs out there?
Say your prayers, eat your vitamins. If you're not with us, you're against us, Jack. That was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.